Good morning. Good morning. I hope you guys are doing well, and welcome to another. I want to say exciting, but we shall see. We shall see what the charts have for us. But welcome to another morning live session with me. I am your host, Leroy James Maisiri, head trader of 365 Trading Academy. I'm not so sure who's going to be joining me today. We didn't have one yesterday, ladies and gentlemen, because markets were just, to me, anyways. We're kind of like trying to figure themselves out, and so I want, if I do have these sessions, I want them to be impactful and useful to you. And so I just felt like yesterday would have had a good discussion on markets, but we really wouldn't have found any plays, right? So I'm not entirely sure what we have today. I'm not entirely sure what we have today. We shall see. But yeah, let's get cracking. One thing that I want to introduce, because I know when I do my war rooms in the afternoons, is the fact that I also never have time to go through everything that I want to have go through. Sorry, on Sundays. And so in these morning sessions, we will be looking at all these indices, one index at a time, right? So that there's some type of clarity and you've got better control over the overall market. Obviously, you'll see the massive benefit of this over time if you stick around and you keep showing up, right? So generally speaking, we talk about Nasdaq all the time in the academy. We speak about the S&P 500 in the Sunday war rooms. And so today we're going to start off with OMX 30. All right, it's one of the indices that I'm going to be looking at today. And then tomorrow we'll look at the DAX, and we'll get back to our FTSE and the French CAC and the dollar index, etc., etc. I'm hoping that for those of you who routinely come to these things, over time you'll get a better control of all these different indices, how they move, etc., etc. Right. So if that's I mean, that's kind of like all I have in terms of announcements. We can then get into the business of the day, right? So just letting everyone know in the public Telegram group that we're on. Right. So, and by the way, this document in front of you is what we trade, right? This is what we call what we trade. This is how we start you off in our course. We look through all these entire assets, asset after asset, until the course is done, so that you are absolutely secured in your trading. So I'll be referring a lot to this today. We'll look at that, and then plus our usual list of things that we normally trade. It's just so that you have that type of exposure. But before we get there, you will know that we've got our usual list of things to kind of like look into. Right. So markets yesterday, got a little bit shaken down, and it's really more to do with the Fed and, slowly but surely, in these smaller meetings, like I just keep getting these headlines and notifications. I haven't watched a single one of them, but in these smaller meetings, Powell seems to be, really like emphasizing that, look, man, recession, I know what I said last week, but yeah, recession is a scary thing. And that's because, increment data is being collected, right? But again, we shall wait and see. Energy is doing well, just like we had yesterday. Oil sector is doing pretty much A-OK. Those of you who are in that oil trade with me, you'll notice that markets didn't come back down, to areas where we were actually scared of, right? So we're happy about that. But overall, it's just another day in the markets, not that much exciting. So I'm going to assume our futures is going to be a little bit down. But let's quickly check the sentiment quickly, right? So we've got North Korea fired long-range ballistic missiles toward the sea, say Japan and South Korea, right? North Korea is just out there having fun, thinking it's like a video game, testing weapons. Now that Russia has that interesting missile, I don't know if you guys saw the Russian missile that no one can stop. They call it hypersonic missile, right? World leaders set up to pressure or to put pressure on Russia. Ukraine appears to be retaking ground. There was another headline, I think, yesterday where Ukraine might not be interested in joining NATO if Russia stops. It's just all sorts of things going on. The enabler of Russian war, Ukraine's top climate scientist blames fossil fuels, which is coal, blah, 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 blah. Stocks futures rise as Wall Street tries to recover from Wednesday's losses. Wednesday was yesterday. Is that correct? Oh my goodness, it's already Thursday. Wow. All right. So all right. Yeah, blah 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 blah. Right, the headlines here really never move. So let's quickly come here. So all right, so future's not doing that bad. really not doing that bad, but oil is still above 110, right? Oil is at 113 and actually coming down. So yesterday we were about 115, but we did speak about the oil structure on the chart on Tuesday, where we're breaking even, which suppliers were looking for to break on the H4 time frame. So I hope everyone who's in that trade with me is okay, right? But anyway, Nasdaq futures still fairly up in the pre-market, right? Let's quickly look at all the energies. Oil 113, Brent oil 120. Like, oil, crude oil has managed to come down at least once or twice since the war to 97, 98 before exploding to the upside. Brent oil has stayed above 100, consistently, right? So something to kind of like look out for. In the US, your Russell still struggling. Your VIX is off right now because it's no markets haven't opened, but just look out for that, right, at about 23.57. So things are fairly normal, and I'm talking about the new normal, right? But let's move on to something much more substantive, right? So German coalition partners come to an agreement to strengthen energy independence, right? Energy independence from Russia, right? Because remember, most of the sanctions are hitting Russia. And Germany gets their gas. There's actually an entire gas pipe that connects the two countries, right? So if they manage to separate, then they can hit, Russia more with sanctions if they want. But right now, these guys are tied to get together. The devil will be in the details again when it comes to reading the PMI data later. All right, so that's for the manufacturing side, and I'm not entirely sure that's ECB, whether it's Euro or Bank of England. I don't know. Today is Thursday. Let's see who's got PMI today. Germany. Right, so Germany's PMI is very important for Euro because Germany as a country is Euro's big economic contributor, right? So we'll look into that later, but just to give you a heads up, Bank of Japan sees no prospect for Bank of Japan tightening policy. So this means, well, look, man, this is one of them. Remember, everyone has an FOMC Powell set up. Everyone has to vote. But one of the BOJ's dovish members says, look, man, this is crazy. We're not going to tighten our policy. We make money by having low interest rates. We make money by being the loaner of the world, right? So we're not going to tighten, right? So let's keep weakening our currency is what one of the voters is saying. There we go again. BOJ Kataka, whatever. A weaker yen is positive. You see what I'm saying? This is like, you really have to read this stuff and understand. And a weaker yen is positive. Why? More people can come borrow from us, right? Remember, JPY is a safe haven and is a loan shark of the world. So if the yen is weak and there's no interest, more people want to borrow because you're not going to charge them a lot of money for borrowing from you, right? So weaker yen is positive for Japanese economy as a whole. And honestly speaking, this policymaker, I'm not saying he's right or wrong, but I am saying he's talking about the way things are for Japan. That is how Japan makes its money. All right. So, right, we're on point there. Right, there's North Korea shooting a missile. Right, guys, not much. I don't want to waste time on anything that won't help us today. JP Morgan says his case for energy independence direct to U.S. president. So America must also become independent from Russia, but also from other countries, right, when it comes to the energy sector. Because then how do you sanction people who you rely oil and gas from? It's almost impossible. Japan's top oil refiners are halting Russian crude oil imports, right? So there's a lot of oil problems. Price will go up, right? Simple as that. We make money if you're in the trade there with me. Morgan Stanley says markets are expecting too much Bank of England tightening. Markets are expecting too much, right? So Bank of England and recommends stay short on pound. I'll read that again. Listen to what this guy is saying. Look, this is smart money. Smart money is saying, look, man, markets have priced in a very aggressive rate increase for the pound in the Bank of England. Because of that, whenever there is too much of something, we are going to have problems, right? You're not, price isn't going to go the way it is expected. We recommend you stay short on the pound. Now, you don't take this as bread and butter and go run with it, because you could be reading this and being used for liquidity. It's not illegal for JP Morgan to say stay short on pound because you don't know when they're going to sell. So you start selling now and they keep pumping the market up for another 2 weeks, and then they start selling. And then they'll say, well, we didn't say sell today. All right. So what you want to do with this information is simply understand their logic and then go do what the supply and demand structures of your charts tell you. So we'll look at pound real quick, just to elaborate on this. But since we're already halfway through the introduction, just to reward those of you who actually come for these morning sessions. Yesterday in the public Telegram group, I gave out 2 cryptos. Well, the other day I gave out 1 crypto, SPX, and then yesterday I gave out another one, and I gave out 7 or 6 long stocks. The last stock I want to give you guys to trade on the public Telegram group, I gave you a link to my broker, Interactive Brokers. Use that link, set up your accounts if you want to trade stocks, right? I was extremely short on Zoom for 2 years in 2020, when everyone else was buying Zoom, because everybody else thought it was time for you. Zoom this, Zoom that, Zoom. I knew it was time to sell, right? Because this asset was overpriced. It's an old school investment strategy, pretty much well taught by Warren Buffett in his biggest book. The book is about almost 900 pages, right? But if you read that book and you master that book, I had to read it about 8 times. I try and read it every December, to be honest with you, except for this past December where I skipped. But anyways, long story short, when an asset enters the market, a new commodity, a new thing, it normally gets overpriced. Later on, public companies can't actually pay. They can't match shareholder incentive with the asset because it's just overpriced. So immediately I knew this thing was going to sell. And since 2020, if you look at the chart, it had an all-time high in 2020 and markets have fallen ever since. Those of you who are here, those of you in the public Telegram group, if you're not in the public Telegram group, please find us, 365 Traders War Room or something like that. There is a link to my broker if you want to trade stocks, no pressure. But Zoom is preparing for a long. Zoom is preparing for a long. I am about to go long on Zoom. It's going to be one of those trade setups where I go long. I'm not going to buy shares. I'm just going to trade the stock, right? I sold it. I'm going to trade the stock. I'm not going to own it, right? I'm going to go long now very soon. I'll put a couple of trade alerts, and you're going to see me a year from now, 9 months from now, telling you, such and such has made such and such, and you're going to say, we didn't tell you, right? So this is just a gift for everyone else who shows up for these morning streams. I don't know what you have going on in your life, but thank you for making the time to attend these. And I do this for you, but I understand, right? It's got to cost you something. I know what this cost me. It cost me a lot of time, and time is the only thing that we have in this world that we can't afford to lose, right? It's the most expensive resource. So I do appreciate the likes, I do appreciate the subscriptions, but most importantly, those of you who are dedicating your time to learn and you think 365 has something of value, this is for you. This is a good long opportunity on Zoom stock. This is a good long opportunity. The stock is 80% down. All right, the stock, guys, in the stock market, it's just unfortunate that stock stuff is only for senior traders. We spend so much time and so many softwares trying to screen beaten down stocks. I barely ever trade a stock that's doing well, except for Tesla, because we understand the rally and all that stuff. But generally speaking, this is a good stock, not only for investments, not only for share ownership, but also for trading. The price differential, the actual movement between these lows is incredible. Now, markets will generally face massive competition in this area. I'm going to spend 15 seconds on this. It's about almost a 236% gain if you catch it. Markets will start to go through massive competition. From who? Insider trading first. Insider trading is generally speaking, a big part of what we're going through. So if the internal shareholders, executives, CEOs of Zoom start to act on the zone, there's going to be a lot of competition, right? So markets might not fall exactly where Leroy wants them to fall. So what you have to do is you have to set some fillers, right? Some fillers, very low lot size areas of value as price starts to drop, almost like an inverse version of dollar cost averaging. The main buy is where I've put the line at about 80 US dollars. This is a stock that used to be on the highs, like the high 500s, almost 600 US dollars per stock. It is an incredible move that you don't want to miss out on, right? So I'm telling you this now. I won't put it up on the Telegram group. I'm just going to put it here for those of you who are here. If you look on the weekly time frame on the stock, where I'm telling you that execs might start to stress just a little bit, to stress just a tiny little bit. Let's see if we can pick up anything yet. Right, I'm going to show you the record. I'm going to type. So I'm on Fins and I'm typing. I clicked on Insider. I clicked on Insider. You see, yeah, I clicked on Insider, and then I'm putting in the ticker for Zoom, which is ZM. Right, and I just want to see what will pop up, because man, you're not going to tell me. It's not going to tell me. Right, let's see, benchmark uphold, blah, 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 blah. Right, I'll do more research on this later on when I get to my office. I'm logged out here, and then I'll get back to you guys. But there we go, insider trading. Never mind, never mind. So we still got the chief financial officer still selling, all right? He's still a little bit down. Option exercise. Okay, so no one is buying yet within the company. No one is buying yet, right? But this will change very soon. So be very, very mindful that we are about to arrive at massively thick competition in Zoom. We are about to arrive at massively thick competition in Zoom, and anything goes. Right. So if you look at the weekly time frame structure here, if I can just remove this area of competition that I've marked out, you know, one of those annoying signs, right, in price. Normally, I do my best to abstain. Normally, I do my best to avoid FOMO and then rushing to start buying. All right. Generally speaking, I'll avoid this, but it's something to look out for. If, however, we don't get a bottom, a proper bottom drop, right, then you want to very much study, you know, break-off structures on smaller time frames, so H4 daily, and then you want to pick short-term trades, short-term swings. Could be a week, it could be 2 weeks, but you want to be okay with them running longer in the event they do. So I've drawn a trend line. I'm now on the daily time frame. I'm like, okay, I see what's going on, value-based demand. I understand that. So I'm going to tighten this area and say, in the event markets were to come back down here, I'll start to take some type of buying, some type of buying. It wouldn't be my long-term swing, which means my heavy lot sizes are at the absolute bottom by the green. Don't get me wrong. But I'm saying for now, in the event that the insiders start to buy, the CEO of Zoom, his secret execs, the shareholders, all those people start to move on these growth stocks, right? These are big tech stocks, guys. You know, I was wrong, you know, in Feb. I thought because of the financial crisis and the drop, all right, that's why in the financial notes that's dropping soon, for those of you who are going to be in it, you'll notice I don't have any stocks in there, because my reading normally is after financial crisis, we normally see movement first in the small caps. And that's not what I'm seeing right now. I keep delaying the release, keep waiting for all the signs, but I'm not getting them. And so it's time for me to move on. So I'm going to be strictly crypto for the month of March and April. All right. But if if I'm right, then most money is flowing back into big tech. And we'll talk about yields another time. So you want to first catch these small bites, right? The small little bites of fish, and see how markets react. I mean, this is a long-term play, right? So taking profit somewhere there, if you can get a good buy inside this area here, none is going to get hurt. Then you want to see if price comes back down. But definitely don't move blindly without having your pending orders in this area of value right there on the daily time frame, because that's literally the last leg of price, right? You can see we've got 1, 2 main bottoms inside there, right? So this is going to be a good long-term trade. I held Zoom going down for 2 years. We'll see how long I can hold it going back up. But if markets were to first clear this zone, this is your first take profit on the monthly time frame, right? Thank you so much, guys. Appreciate the comments. I see them there. Togozile, Joy, and Jay. Appreciate you guys so much, right? So this is just a good thank you for you guys for showing up, right? So let's get back to what we're doing today, right? So put in payment, blah 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 blah. All right, whatever. Let's move on to the markets. Let's move on to the markets. Anything to look out for today? We've got PMI for German, right? So that's going to shake up Euro quite a bit. That's at about, in the next 1 hour from now, right? Euro is going to get a lot of PMI data. It's kind of like CPI, but for manufacturing sector. So it's actually quite a big deal. Swiss franc monetary policy assessment. I honestly never care about anything Swiss. And that's just me. But if you are got any trades, just watch the volatility. Not really much of a big deal. And then everything else is low key. So Euro is going to get a shift and a shake an hour from now. And it's nice that markets have opened. Crypto is a little bit up. The entire market cap is a little bit up. Bitcoin is, I did post, I said Bitcoin has broken that H4 supply. So now we wait and see. now we really wait and see, right? So I won't get in too much into crypto, but you really want to watch your top 10, and you always want to look at your last 8, 9, and 10, where there'll be a lot of change, right? If there's anyone who's introduced, there's a lot of competition to get into the top 10, right? Solana is still doing well, but still, a little bit away from where it was from its all-time highs, right? All these coins are far away from their all-time highs. So yeah, the crypto market has gone up by 3.1% in the last 24 hours, which means your indices are also doing well. Don't forget about Zoom. Don't say I didn't tell you. Right. So business of the day is to kind of like, stay grounded on our usual charts. And then today, like I said, we're going to start adding one new index every single day. One new index every single day. All right. So Euro Pound is the first trade. Oh, first chart. Sorry, I'm out of breath, guys. Yes. Right. Wrong broker. Wrong broker. Oh, this is starting to look very nice and neat. Yeah, I mean, look, yesterday I didn't take any trades. I mean, as per my announcement, I honestly didn't even look at charts. I was just researching more crypto, more. Every time I think I'm done with the Wealth in 3 years financial notes, then like I think of something else. Right, look at this. Look at the structure here. All right, so this is Euro Pound on the 1 hour time frame right now. This is how markets are opening right now. Right now, right now, right? We know for a fact that an hour from now, something will shift. So, this could be a very good zone for markets to bounce back exactly an hour from now. Markets could spend the next 1 hour coming to retest the zone. Could also be a good place for price to kind of like collect some money, right, from you, right, specifically from you and me, right? So be very careful about that. But I didn't get anything sentiment-wise that things have changed, right? I didn't get like an overall sensation that markets are looking happy. My take is obviously to sell higher, but that always means if there are 10 trading opportunities, I only get 1 or 2, and I'm okay with that because generally speaking, they tend to be much more accurate and make up a lot for my risk to reward. But this is a good trading place, right? I don't know if it's going to do for you what we wanted to do, but it's definitely a good trading place. If things go, I guess, terrible in terms of PMI, I mean, I haven't been following PMI to give you a prediction right now, unfortunately. Right. If I draw out a Fibonacci, the zone here is still my area, my given area of choice. All right. So now I want to see confluence. I'm going to go 2-hour H4 daily. On the 2-hour time frame, we've got confluence. On the H4 time frame, we don't have that much confluence here on the zone on the H4 time frame. It doesn't necessarily mean price won't work for intraday. For swing trading, absolutely, it would be a big no-no. Right, and we also have something here on the H4 time frame, so let's not ignore that. We've got the makings of somewhat of a terrible version of a bearish engulfing pattern here. Right, if you look at the bodies of the candlestick, the green, or it's just that the green candlestick is a very, very long wick, right? So you do have something that looks like this. And if you go back to H1, you'll notice there's probably a supply above that we missed. Yes, we did. Right, so I say this zone, but right above you is this. So if you're going to take a risk on the zone, choose that one. Right, rather don't get triggered, right? Let's say markets do last and trigger there, choose that one, right? I would so much feel you could still lose money, but it's so much better to lose money after making a logical decision to choose a higher supply than this. But this is some serious selling. Like someone is dumping for some reason, whether to premeditate, whether to trick retail traders. Smart money is dumping here quite hard. So it's going to be something just kind of like to look out for, right? But we did find confluence on 2-hour and definitely H4 there. I could go small lot sizes. Those of you also want me to take a risk with you, but I'm really not interested, to be honest with you. Personally, I would rather wait for a bigger drop. Remember, once again, Euro Pound for me is a tricky chart in the sense that I only want to take a long-term swing. I only want to catch the highest sell point. It could be this one today and price never gets back. I understand that, but I'm happy to leave my pending orders up there, and I've got pending orders a little bit higher as I go up, or I adjust accordingly as I watch markets form the structure, right? But this might be a good intraday play. This might be a very good intraday play. Only time will tell. All right. So just be very risk away. Moving on, if that's okay with you, Euro USD. I'm remember I split these things now. So we look at 5 assets a day so that we don't repeat the same stuff. So we looked at these on Monday, looked at the different ones on Tuesday. Yesterday we didn't have a session. And so today we're back at looking at where price is from the things we looked at on Monday. Right, Euro USD is sinking deeper and deeper and deeper into that structured demand. And again, my rules are the same. Until, unfortunately, I get at least a daily demand break, I don't want to find myself selling in here. Someone in the public Telegram group, and I'm still to write a long message there just to make sure I answer everyone. Someone asked me a question and said, or asked the group that did Leroy say Euro is still weak? And I just want to just clarify and speak very clearly. Euro is, yes, weak, but Euro is potentially at a very strong turning point. All right, so you have to be very mindful of that kind of stuff. And also, you also want to trade based on what you see all the time and not what I say. All right, so you really want to get to a point where you're working and grinding with your own analysis. And the reason for that is, I promise you, it makes you a better trader. Right? I'm not here to dish out signals. I hate that what we do a lot is about signals. I really hope that there's a lot of learning involved, right? Because that is the only thing that grows you as a trader. Now, why is Euro still weak and not really still weak, right? Euro is still weak because price isn't turning, but it's at a turning point because it's inside a governing demand. And that's an area that you don't want to mess with. You don't want to blindly go with the weak thesis, right, long term, and then miss out on price exploding in your face, right? A good example of this, you see this area here. You see that there's another supply here, very close to a demand. You see this, guys? There's a supply very close to a demand. Let's look at 2 charts historically, just to make my point. When I started with the dollar, but I'm not going to go to the dollar chart where I've already marked up. So I'm going to go to a clean chart on the dollar. This is the dollar, DXY. Now, I want us to go back in time. All right, this is the dollar on the governing time frame. I'm going to draw a couple of supplies and demands here real quick for you. There's Donald Trump's supply. On this broker, I've always said it's weird, but it is what it is. On this broker, people are trading a broken supply, which means we're going up. All right, so it's something to look for, right? You trade what you see on your registered platform, right? Whoever your broker is. Now, this is where you draw a demand, right? Now, if you were to please do me the honor of just forgetting this incredible rally we've been climbing since the Fed first announced they were going to start looking into increasing interest rates, which literally the dollar was surprised and happy about because we're coming straight out of quantitative easing, right? If you just ignore everything in front of you, if you just give me a second to do that for you, right? There we go. Right. If you ignore all of that, you will see that, look at this. Markets came into a supply, leaving a demand and reacted to this supply here. See the supply here? Ignore the stuff in the black. Ignore the stuff in the black. I just want to paint some real life market scenarios because if you just run it one narrative blindly, you'll be in trouble. You'll be surprised how many swing trades I missed ever since I started doing these London session lives, because we're always looking at markets in the shorter time frames. You actually lose track of the bigger picture, right? So you see this yellow zone, literally a supply just above a demand. Markets made contact with the supply. Markets came back down. Markets broke the supply. Look, we're going to go back and look at euro. But if you want to see it in the context of a currency, just look at USD CAD. You're going to get the same similar setup a long time ago. Governing time frame, there's a supply, there's a demand, but I really am interested in this one here, the one first, not the one up there, this one. Markets left a supply, markets hit a demand, markets hit the supply, markets came back down for a month or two, and then it's been struggling since to go back up. So when it comes to Euro USD, yes, I think Euro is weak. I do. I absolutely believe that because I'm looking at the presidential chart. I'm looking at the long term picture. But I'm not a fool. I know that markets have every right to bounce in here. Where could the bounce be? How far could markets go? Well, if the first bounce works, which is this demand, which is the March candle, which there are like 6 days left for the, this candlestick to close. Well, then markets have to land up somewhere here first, right? This is our first supply. And I keep saying to you, if you want to get to C being this yellow zone, this is B, this is where price is A, you're going to have to go through here. But markets might not go through it straight through like a hot knife through butter. Markets might first do this and then do that, right? So you want to trade euro weakness with quotation marks, very much aware of everything else around price, the dynamics, the everyday dynamics. We're about to start a new monthly candlestick. Where is price? What do you think April is going to start as, right? Historically, like, and you see this even more clearer sometimes on the smaller time frames. Your microstructures, what are they doing? Price is fractal. Are they creating lower lows? Are they creating equal highs? Are they moving up? Are they not moving up? It's just a massive game of cat and mouse here, right? So Euro USD on the 1 hour time frame, markets are currently defending 1,09625, right, with a clean refusal to go any lower, right? So this is something you want to look out for. This is something that you want to be very much, mindful about, right? In the event that you get a break of market structure, that price is continuing down. If you're selling, you're a cowboy and it's up to you. I cannot for the life of me sell inside a green zone. It's just not smart for my trading rules, right? I do see on the daily time frame, you can see for yourself that selling is very much encouraged. We've got a PCP that's been honored. So what we want to see next week, Monday or Tuesday, is we want to see an imbalance continue to the downside, and then maybe this will be a good place to start selling. For me, I might be excited to sell with you in the zone if we break a daily demand. Give me something. If we can break one daily demand, then I'll know, yes, more room to the downside, right? And if the daily demand would be something like this here, that's not even a good demand. Just so we're all clear, that is not a demand that I'm proud of, but that would be slightly more enticing. The idea to sell, if we're to close beyond this yellow zone here over time, would be more enticing than it is right now. I'm not buying, I'm not selling anything in Euro USD. I guess we can call that some market information, but right now I'm staying away from that market, right? EURCAD, chart number 5. I really want to learn to get this thing down to an hour, ladies and gentlemen. So I do apologize for my speed. But I really want to, master just quickly, just 1, 2, 3, and we're out, so that we don't rob ourselves of a lot of things, right? So EURCAD, we finally accepted that, this thing broke the daily demand, broke a weekly demand. There's nothing here. This thing is just opened itself for a perfect swing. I don't know, who's seeing what, right? Why? CAD is strong, oil is strong, euro is falling. I won't repeat this thesis of oil and CAD. I mean, I've done it a couple of times in these sessions, right? We've got a pioneer structure break here, which is a good place, a very good place. On the H4 time frame, it gave us a bearish engulfing pattern right over here. I hope you guys remember that. There we go, bearish engulfing pattern. All right, it looks something like that, right? And because it looks something like that, because of the doji and how you draw it, I wasn't in it. My area of competition was tight, but if you caught that, good on you. I definitely didn't. I wish I had, because I was the same person preaching that this thing is going to go down and you can't sell here right now because you're going to get a demand. But markets actually took out this demand. So I don't know. I only want to delete zones during the live sessions with you so that I don't, edit the charts when you're not there. So now I'm happy to remove this area. We now know that price was broken. We didn't even draw this demand. Markets didn't even give us a chance. Came back to this beautiful supply that I spoke about on Monday. So I really hope someone took it, right? Or maybe you were like me and your area of competition was a little bit tight, right? So mine was a little bit tight. I think the zone looked more something like that. And so I missed this by 3 or 4 pips. You wouldn't believe, just 3 or 4 pips. And markets just could continue to the downside, right? So markets are gone. You literally have to deal with that. Like, if you want to trade this asset, you're looking for a pullback. I like significant pullbacks. I like pullbacks that make me feel the first time I saw the mother of my kids. That's a pullback I can trust. And that looks something like that all the way up there. It is nowhere close to here. This is not an attractive pullback. This actually reminds me of my ex and the trauma I went through. So this is a cowboy sell zone. You can take this if you want it. Maybe some of you are not traumatized, but for me, personally speaking, I'd rather wait a little bit high there, right? There's something going on in this area. It's quite big, no longer fresh. So that's unfortunate. Waiting up there, you don't have a clean imbalance. Man, then maybe you're looking at something that looks more like this, broadly speaking, right? So just be mindful of that. But yeah, this could be a potential pullback zone. I have no interest. Why? Look at how close we're about to approach. This is all euro. This is all euro. This is about to happen in the next few minutes, right? The expectation, maybe you can wait for this, by the way, it's going to take place in about a couple of minutes, an hour, or rather 15 minutes from now, right? So let's quickly talk about PMI in German, right? So manufacturing PMI, guys, is really the output of a country, right? Output of a country, based on a survey that basically, I guess, the industry, captains of the industry put together. Well, let's read what's going on here, right? So level of diffusion index based on surveyed purchasing managers. There we go, captains of the industry or managers in the manufacturing industry, right? And so basically, they tell the government, look, man, this is how many cars we made and this is how many cars we sold. This is da da da. It's basically output. Manufacturing output is doing well or is doing bad, and they normally look at the top 800 purchasing managers, which asks respondents to rate the relative level of business conditions in a country. It includes employment, blah blah blah, right? So PMI has been doing extremely well since last year. But if you're looking at October, November, December, it's only Feb, the last data that we got, that was not up to standard, right? And that could be because of supply chain issues. It could be because of the fact that this is Euro. Think about it, and there is a war, right? So how bad could it be in March now? Because really, remember, all these things are reading data from a month ago. So how bad did the war actually start to affect trade, manufacturing, and all that kind of stuff, right? So if I was a betting man, I wouldn't be too optimistic about a good read. If I was a betting man today, I haven't done research. I have to literally compile. The reason why I'm always accurate at NFP, ADP, and all those other things that I'm accurate about is because I have to compile the data. I have to watch all the pieces put together. I don't care about PMI. So I don't know. I honestly don't know. This is not enough information for me to give you a call. But if I'm just thinking instinctively, we might see a negative PMI next month, but definitely for March because of the war. If you're in Europe and half of your Europe is involved in a war, you're going to have problems. You're going to have transportation problems. You're going to have delay. You're going to have output problems. You're going to have output fears, right? So this could be another negative read in PMI. And if that's the case, then you should see more weakness in Euro. You should see more weakness in Euro. So it's definitely something to kind of like look out for. A lot of your Euro pairs that we've looked at have close areas, which could work for cowboys. They actually could. But you also could get a surprise attack. And if you get a surprise attack, you're going to get a massive spike, massive wicks. Even if price still falls, you will be liquidated, right? So trade safe, trade after the data is dropped. That's the wisdom of today is wait an hour. Come back to all these zones, draw newer zones, wait an hour, let's see how PMI drops. You would know that all these trades ideas, because they are on intraday time frames, we really should be digging down to 15 minutes, right? You really want to see clean, right? Euro pound. I mean, if this isn't what love should look like, I don't know. Commitment to the downside, just phenomenal, right? Finally, strong, ready in on the 1 hour time frame, all right? A complete eradication of any and all demand. So this was a strong demand level once upon a time. And that's nice to know, right? Because you really want to know the difference between where retail traders are waiting, support and resistance traders, and historic memories. So this was a demand they didn't buy. I can guarantee you now they didn't buy. They were waiting for price to support. Now they bought, they got robbed, right? And this is just the trick of the game. Clean rally up, prices come back down. Right, now that that's happened, right, we have to ask ourselves, where is a good place to sell? We've got this area here, like all Euro areas, right, which will be, nice and all that kind of stuff. And personally, for me, I would not be that involved in that zone, right? But this cluster is also a little bit unattractive, this whole area here, because naturally I would want to go wait up there, but it's the rolled road well traveled now. Way too many trading or traders or trading activity has occurred in this area. A lot of trading activity has occurred in this area, which makes it completely unattractive for me. Normally, I want to be the first there. Right. So that being the case, let's see if there's anything left to mitigate the zones. I'm going to drop in straight to 15 minutes on pound AUD, which is what you would have done anyways as an intraday trader. And you'll notice just below the break of market structure, just below the break of market structure, which is somewhere here, right? This supply is there. Now, this supply could do two things: prevent price from going any further, so it makes it the first place to take risk. But you generally always want to trade the supply that broke market structure. So we've got two fresh 15-minute level supplies here, two fresh zones here that have not been mitigated. All of them perfect. This is not an engulfment, but look at the imbalance, unmatched, just beautiful, pretty, right? This is also quite strong, highest area of value. So what can we do to help us make a decision? Let's pull out some tools. Tool number one, swing low, swing high. Let's see what we're working with, right? So I pull out my swing low, swing high. I get a nice 50% ratio there, where a lot of retail traders will be looking. And then I also get, first contact with my golden ratio. So what I'm going to do is I'm going to leave that there, and then I'm going to go 5 minutes. I want to see the zone. I want to know, when you do 5 minutes, I mean, there's one specific morning session where I taught intraday, level one, basically, and didn't give out signals. So I just want to add to that. Where you put your stop loss on the intraday, be careful. You always have to go another time frame lower, because if there's a supply above you, look at that stuff, man. Look at that stuff. You see where I just instinctively drew my yellow line? Right, there's always, and that's the real supply. I guarantee you right now, if your stop loss is here, right, above this yellow block, do you guys see this stuff? I mean, you gotta see this stuff. Be very careful. Be very, very careful. I'm gonna zoom in a bit on the 5 minutes time frame. We gotta scroll. I zoomed in quite a lot. But please make it a habit to do this. You have to check one time frame lower, because you will always have a situation where markets went my way, but I got stopped out. So this is what that 15-minute zone looks like, right? It's got a nice bearish engulfing pattern, but on the 5 minutes chart, this is what you're dealing with, right? You have to include this little supply there. It's a better place for you to, goodness gracious, it's a better place for you to make sure you've got the whole stop loss game on lock. I'm going to delete this yellow line. You guys get what I'll fix it on the 15 minutes chart. I'm going to put my horizontal rate just above there. So this is where I want my stop loss just above here. If you're taking a risk on that zone on the 15 minutes time frame, you want your stop loss just above there, something like that, right? Keep it simple, right? So it looks like on the 15 minutes time frame, you're covering, you've just gone a little bit higher than usual on the 15 minutes, and that's only because guys, I just hope you're not confused. This first white line, I'm going to make it red, is break of structure. It is not stop loss. It's simply marking break of structure. The white horizontal ray line is your stop loss. And it's because I am keeping to account the 5 minutes stop loss. All right. So that's a good place to wait, and it's a good place to take a risk. And if that doesn't work out, well, such is life. Only because there's a better supply up there. 27 pips, then you're waiting there. Happy to take a risk there, right? But just be careful, right? Just be careful of all these other small levels, right? This has already been mitigated, no longer fresh. Markets are dropping. The next time price comes back, it might negotiate with you here. All this green zone in a very strong demand. So you just want to let that slide. So we've done 1, 2, 3, 4. Last Forex pair, then we look at our new index for the day. Last Forex pair, and look at the time. Got 10 minutes left. Getting better at this. Getting better at this. And you have to blame my partner. My partner used to say I don't open up, I don't talk enough. 6 years later, I now talk too much, right? So this is the work of my relationship, right? I know I take forever in these things. Right, there we go. So pound USD, let's go to 1 hour time frame. Right. Woo! I'm not even in it. Oh, no. We took profits. I was about to say, did we lose a trade? No. We didn't. This was pound on Monday. This was pound on Monday. We did a live session. I posted the results of this trade. It was a 1:4. Brilliant take profit. Stupid Leroy didn't take the buy though. I did not take the buy. Let's see why. Oh, that's because on Tuesday we looked at other charts, right? We didn't look at pound USD. So maybe we missed the signal. I don't know. But even for the buy, markets landed here. This for me would have been a goodish, clean imbalance. There's nothing wrong with this level, right? Came in for a fresh touch, comes in deeper for a retest, price explodes, just like I taught you in module 1, right? So now price has done all this cool stuff. We know that bank off. Remember, I said we're going to look at the pound at the end of today. We know that the pound is aggressively strong right now because the pound keeps doing these aggressive interest rate hikes. And if they don't do interest rate hikes, they definitely have the conversation of being aggressive. We know that somewhere in Forex Live, we saw a headline that said, look, man, JP Morgan said, there's too much tightening is happening here, keep pound shorts. Remember that's the headline that we saw this morning. There was a market signal. Smart money saying, I'll still maintain some shorts in the markets. And we want to verify that information. We don't want to trade it blindly. Like we know that smart money only makes its most money when they use us for liquidity. So we can't say they are trusted advisors. They are not. There's a nice gray area we marked. Goodness gracious, I didn't put a pending order. This gray area, we marked it once upon a time. I don't know how long ago. In March, markets came back. Guys, look at the black line. Clean. You still have people who don't want to take the course because they think we don't know what we're doing, or I don't know what they're waiting for. Clean area of value. My goodness gracious, I regret missing this. Wow. Right. Anyways, markets regulatory zone that we marked as gray, which would know is an intraday rectangle. What are your thoughts? Hey, brother, what's good, man? What's good? Good, Seth. I'll have a look at Euro NZD, bro. I'll look at Euro NZD. Right, today, there we go. Markets are dropping aggressively. Sorry, can I quickly mourn one more time? What a beautiful, clean trade to take. What? Man. Only 26 pips. I would have almost gone probably a standard lot size or something here. Very clean area of value. Right, so, anyways, you move on. Right, the next place out, fear, for those of you, maybe some of you are in it, maybe some of you are more organized than me and an opinion order there, I don't know, but be very wary of this zone. This is a good place for markets to stop falling on the pound. This is a good place for markets to stop falling on the pound, right? So I would not want to be holding any sales there. And besides, at some point, for intraday, this is a clean risk to reward ratio. I'm so upset. I genuinely am. Right. So the 1:6. I hope someone on the trading floor at the office took it. Their job to be more organized than me, right? So this is actually beautiful, right? So markets are continuing. If you're looking for a retracement zone for the sell, there's only one, and it's a high risk area. That is to say, it is too close to where price is right now. The competition is extremely thick, and when competition is extremely thick, you will get a consistent basis of liquidity rate. So watch out for this zone at 3 p.m. during the New York session, or even later on today. I mean, this is just the one, the 9 a.m. candlestick. This area needs to be mitigated. It is definitely a strong contender. You're getting half the risk to reward. You're taking on all the risk, but half the risk to reward. So I just, I don't feel like risking money today for fun, right? But this is a potential. It's a very good potential. I'm marking it in red. So tomorrow when markets do this, don't say I didn't warn you, right? When they go through this zone and take your stop loss out, this was the mother grail. This was beautiful, right? This was beautiful. You might get a play like this. You might get a play like this. You might get a play like this. So this is the only place where I'm going to risk money. Knowing that I've lost the true movement, I've lost the fresh touch. If you take our course, we teach about these things. Check out our module 1 specifically, rules of areas of value, fresh touch, how many areas, blah, blah, blah. It's very important, right? I'm going to go quickly 15 minutes and see what that yellow zone looks like. Quickly. Yeah, so I'll take a risk there on the yellow zone. But yeah, it's really all fun and games now. We've lost a prime sell. Well, I've lost. Let me talk for myself. Maybe some of you are in it, right? I've lost a prime sell area, but it's 15 pips that I'd risk stop loss just above this whole yellow zone and see how that goes. Let me go 5 minutes. You see, 5 minutes be brutal, bro. 5 minutes be lethal. You have to see these things play out. Matman was like, nope, no, and fresh touch there. You guys what I'm saying? Like literally, before they left, they made sure to drain this zone. So it looks kind of fresh on 50 minutes, 1 hour, etc. But there's a lot that was put into this play. Took out a supply, took the fresh touch there. So if I'm taking a risk because I've already missed it, I'm not going to risk 15 pips. I'm even going to go a little bit lower. I'm going to wait for price to climb all the way there. Go 7 pips, big lot size, small risk, and see what happens. This is 8 pips. 8 pips on pound USD, and that's only because I'm betting for a retest. Although the imbalance is a bit staggered, right? It's not a good supply. There's a high chance that I could easily get stopped out here. Because once again, the big movement is gone. The big movement is gone, right? But that's pound USD, nice to see our analysis and the labor that we're putting into these morning sessions is paying off, guys. I mean, I really hope, even if for me, I'm always happy. Yes, I'm not in it, but still, this is a good zone. Cowboys, right? There's nothing for us to do here. And then pound, the buy is going to be based on our overall analysis on the pound. Once again, this is the last chart I'm looking at, except for the fact that my blood little brother Seth just showed up. Why are you in currencies? This little guy is always trading derivatives. We don't want you here, man. Right. So we'll look at Euro NZD for my little brother, and then I'll move on to the last index for the day, and we're gonna call it a day, right? So I'm really gonna break down pound. So this is pound. Why am I here? I'm here because JP Morgan said, monetary tightening on by the Bank of England is too aggressive. So maintain pound shorts. That's what one of the biggest smart money assets ever said. Morgan Stanley is a big thing. In fact, not in the Wealthy in 3 years program, but in the financial stock notes in 2020, we bought into that stock before it was $100, long before, and it did well throughout COVID, right? So you want to listen to them because they definitely know what they're doing. Now I'm looking at the currency index for the British pound because smart money just told me that, yo, you guys are being too aggressive on this thing, right? Maintain shorts, and I want to see, right? So maybe in this coming war room, I promise you, this Sunday the COT spreadsheet will be up to date. I promise you. We'll look at how the flow of money has been done into the pound so that we can really have full information on this whole thing, right? And newsflash, this Saturday night, I'm going to advertise it later on. Saturday night, we're going to have a traders movie night on the channel on Saturday. I'm going to be breaking down Ray Dalio's New World Order video. I haven't watched it, so I'm going to be reacting to it for the first time with you guys. I bring up Ray Dalio a lot because if someone was to ask me where am I going with my life as a trader, as a floor manager, as a head trader, I would definitely say Ray Dalio's work, his books have had the greatest impact on me. If someone was to ask what type of a hedge fund manager I would want to be, and not that I want to be worth 20 billion US dollars, which is currently what he's worth right now. It's not really about the money. It's more about the control of information that man has and the ability to do what we call economic history. His ability to research economics, macroeconomics, and come up with good trading and investing tips is out of this world. So for me, that's my, it's not my mentor because I don't have actual contact with him, but I would love to be mentored by Ray Dalio, at some point, some distant point in time in my life right now. So we're going to do a movie night this Saturday. The video is about 40 minutes with me talking in between. It's going to be about an hour, 15 minutes. So just budget for that. All right. Yeah, okay. Someone is excited about that. I'm also excited too. And what I want to do is I want to couple what he's saying based on what I'm also seeing and how I am preparing for this current lost decade, right? We are in the lost decade. It is not a debate. 2020 to 2030 is fundamentally going to change our idea and perceptions of money. Anyone who doesn't see that right now is really behind the race. And I'm going to show you how I'm going to start to prepare myself for that, right? All of that stuff I do obviously in the world in 3 years, but I want to explain the macro ideas, but I also want to hear what Ray says for the first time with you, right? So now here we are with the pound. Sorry for that sound bite. Here we are with the pound, and I've got more, Morgan Stanley telling me go short on pound. Now, I've told you guys many times that this thing is to follow the same long-term structure of Euro USD, right? And that structure really looks like something like this. Looks like there's a lower demand here. It's a very ugly demand, number one. But we can't forget our basics. What are our basics when it comes to this asset? This is a sell profile asset. It's been a sell profile asset since the beginning of the last crash in 2008. You see, this is the peak of 2007, where pound was just strong and bullish and everything was fine in the world. And then since then, this asset failed to ever return there and has done nothing else but go lower and lower and lower and lower, being dragged and actually falling. US 30 as well. You guys want me here forever. All right, cool. No problem, Alan. I'll look at that as well. Right. So this thing has been dropping down. Right. So when Morgan Stanley says keep the shorts on when smart money says keep the shorts on something, they're not just lying, but you need to get the timing right. Shorts for pound, long term, absolutely. It's a no-brainer. It's a sell profile asset. Over time, you make more money that way. And smart money is known for positional trading. But where do you want to start getting those shorts done? Right now, we have to break a governing demand. We haven't broken a governing demand. And when we do break a governing demand, we need to make sure price is coming from a supply. Right now, price is struggling to break the governing demand, number one. It will fresh touch, retest. Everything is coming together. By the second financial quarter of this year, we should be looking at a different price structure altogether by the end of the second financial quarter. I would say if we're breaking structure, if we're going down, if we're staying short on the pound, I would first wait for an upward move, right? So this is the currency index. It's not clean. You want to see a better, cleaner version of this, please definitely look at pound USD. All right, there's a lot of similarities here. But if you want to clean up the chart real quick, you can tell, between you and me, unless if markets really, really reductively fall right now, and Goldman Stanley has sent in quite a shockwave in the markets, you'll get that. I don't think that's likely to happen overnight. I think you might first have to get something like this on the weekly time frame. Then we are talking about make sure you maintain your shorts, right? Make sure no matter what you do, you maintain your shorts, because then we're going in, right? So you can see they took out this demand, right? Kine will show you a better volume-based distribution of price, right? So you've got a fresh touch here on normal candlesticks, but on Akine Hashi is the first time markets actually tapping into a weekly demand, all right? And markets have broken one before, promising you new lows. So as long as price doesn't close above the zone to create new highs, then we expect markets to go down. What's my message? Be careful when to sell. It's not a good time to sell right now. Right. What we want to see? Want to see retail trader strategies fail or succeed here. This used to be a demand, used to be a historical area of value, right? Someone in the world, somewhere, is seeing resistance. Because of that, they're going to start selling in volumes. And they might sell because they are fundamental traders, and Morgan Stanley say sell, and that's fine. We want to see them being obliterated in the markets. Then we want to see price slowly but surely climb into these zones here. We want to see price slowly but surely climb into the zones there. Right, so if markets ever come back up on the pound, this is the entire pound currency index. So pound USD, pound AUD, pound this, pound that. But if there's correlation with this and all other currencies, then if I sell here, there's going to be a swing sell for me, and I'm never going to let go. Right, I'm never going to let go. So I'm just saying they are right. Most sell side, they are right. It doesn't make sense to be in the Eurozone and being so tight with your monetary policy, but it doesn't mean sell today, right? It means the right time to sell, right? So that's pound index done. Then I want to look at, okay, wait, let's look at Euro NZD first for safe. Euro NZD was supposed to be something we're looking into tomorrow. Okay, there we go. So the swing trade idea is all the way up there for swing trades, right? All the way up there. And by the way, this zone, if you remember, has no confluence. It's a high risk zone. There's nothing on the weekly to support it. It's just a good drop off point. So later on, when I start to get real swing lows, I'll then be able to draw a Fibonacci. Until then, there's nothing I can do. On an intraday perspective, Mr. Safe, markets are flirting with the potential of going back up. I think they'll need PMI to bolster this. We've got a fresh demand here on the 1 hour where markets are sitting on. In my experience, when markets consolidate on top of a zone that is supposed to shoot it up in a direction, so in this case, go up. In my experience, this zone ends up being broken because all of this is buy, sell, buy, sell, buy, sell, buy, sell in a buy zone. So who's selling back? Market's supposed to be going up. There's still a lot of active sellers here. They could be dumb traders, don't get me wrong. But if they're not dumb traders and it's a price control, you've got that problem. Problem number two, you've got a fresh supply just above here on the 1 hour time frame that your scalpers might want to use, right? So they might buy just to get out here, right? So just be mindful of that as well. It's not a good place for me to sell. I'm not saying I'm going to sell there. I'm saying be mindful of this. Be mindful that if markets are to go up on Euro NZD, markets have to take out this. You really want to see such commitment because, yeah, there's this zone, but there's also this zone that you don't want to forget about, right? And this zone here is already given a fresh touch, and this zone here is not yet mitigated. So you've got two supplies there, which means you need a lot of buy power. You either need, an entire army of dumb traders to put their money at work here, or you just need to wait and see. Granted, in about 23 minutes, it's going to be PMI data and Euro is going to dance. So you want to watch out for this at 10:30 South African time. You want to see how price goes because remember, PMI could be bad. Like I said, I don't know when the data was collected in February, but by the 24th of February, there was a war. So maybe markets were not affected by then, by the time the PMI data was collected. But I know next month's PMI data should be negative because the war should have really disrupted a little bit of the manufacturing sector, and let's see if it's different. But if it does and it's negative, then you're going to get a nice little drop into the zone. It's going to go deeper and deeper, right? But if it's not, right, you're going to get a little shut out, right? And any of these supplies could slow down price. So, if you decide for yourself, knowing when to get out, but also knowing when to get in, and also your risk to reward. Say, that's the best I can do, buddy. For the most part, you can tell I have no interest in trading this chat until markets get a little bit up there or get a little bit deeper into that demand. Okay, say, let me know if that's good for you. US 30 is not the index for the day, but Mr. Allen is one of our registered students, so I will oblige. Right, what's going on here? Right, so we first have to go up there and then potentially come back down, yada 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 yada. Right, so indices are doing something interesting for the most part. Let's start off on the daily time frame just to get a better picture. Let's remove this. Right, so we've got this. Markets broke out, FOMC, interest rate hike, blah blah blah. Then FOMC said economy strong, blah blah blah. Why this? This is probably an H4 supply. Yeah, there's an H4 supply here, but it's not the strongest, right? So let's just make this here red. Markets can bounce there, but markets won't last long there. They won't be forced down this level for a very long time. But it's a good place to start thinking about exiting if you're in any longs. The supply was for people who bought somewhere down here on 16th of March with the FOMC talking, right? Somewhere there, right? Those of you on Nasdaq, I streamed that thing live, etc., etc. But it's not for people to sell now. It's a take profit zone for those of you who bought on the 16th of March when Powell was giving us his interest rate hike. Markets now all of a sudden are forming bearish signs, yes or no. And that's because the Fed keeps saying stuff like recession might be serious. You've been holding since 5 p.m. yesterday. Nice, Ben. What are you holding? A buy or sell safe? Let me know. Right. So just be careful, right? This is because Fed is saying stuff now, new stuff. He's saying, look, man, recession might be bad. I might increase the interest rate, which is good for the dollar, but bad for business. Because if you see this going on 0.50 before September, if any of these FOMCs it goes 0.50 before August, September, it's technically a rug pull from what he said to the world. And if you get a rug pull, companies don't like that. Stocks are going to fall because number one, there's an agreement by Powell to say inflation is bad. I'm bad at my job. I miscalculated, makes me bad at my job, and we're all idiots running the world, right? So that's what it means. And every other economist has been telling us to go 0.50 from the get-go, and we didn't listen to them, right? So all of this is not good sentiment for the markets, right? I mean, again, if you ask my opinion on this stuff, I think we're supposed to be on 0.50, and we're probably supposed to stay there for about 4 or 5 meetings. But it's not my inflation. I don't even stay in America, so I'm just saying from an analyst perspective, right? But in a normal situation in life, would call this a bearish engulfing candle. Would also say, well, that is cause for worry. Would say, look, markets are preparing to turn. And I would, in a normal day, encourage that behavior. But because these are indices, I would urge caution. I would urge a lot of caution. It is a play on sentiment. And that being the case, be careful. Be careful that markets don't rob you. Don't rob you of your capital by posting these things here, right? Remember, for indices, if you're a registered student, you still want a couple of things in line. You don't want to take order blocks that are randomly positioned in the chart. You want to take random blocks in line with 365 numbers because we understand why. If you watch a Bloomberg live, these guys just rant these things. It took me it didn't take me long to figure this out. Holding a buy. All right, cool. Good luck, buddy. Good luck. I don't trust it, but good luck. Right. So I'm just quickly looking here. Let's do this quickly. Mr. Allen, what you want to do, Mr. Allen? Are you looking to sell? Yeah. All right. Then I'm going to go H4. Nope. Can't take that on a small account. It'll kill you. So I'm first going to go like this and then see what that looks like. Nope. Then I'm going to go like this, see what that looks like. Yeah. Right. So on the daily time frame, I mean, obviously it wants you to start selling you on the pre-market. I think that's suicidal. If you want to sell, Mr. Allen, and just remember, sir, it comes with a lot of risks. I mean, selling right now, it's definitely probably within that week of the daily time frame. Make sure you give yourself about 25 extra points, but I'm leaving the zone rate. I'm not saying it can't work. I'm just saying, it's a tricky one because it's a sentiment trade. So I've gone down by 25 points, 347,775, 25 points from 34800, which is, technically okay. Just be very mindful of the risk you're taking here, right? So on the other side, during the pre-market, Mr. Allen, this is what you want to look out for, right? You've got a kind of break of market structure here, where markets close a little bit lower there, and that's great and all. And then you've got something annoying down here in this yellow zone. And if you go to the 1 hour time frame, you will discover what that yellow zone was. Let's do this. Okay. So I'm just going to rebuild this for you. So like 2 days after FOMC spoke, when markets were like, yep, that was a nice meeting. Thanks, Powell. Thanks for saying we're doing a good job. Thanks for saying you're going to save jobs. Thanks for saying the economy is doing great, even though you're going to increase the interest rate. Great talk, right? So you can see that markets mitigated demand number one, but didn't come down all the way here. So you do have a fresh demand down there, something to look out for. My opinion is, Alan, you probably want to play this live. Before you go blind with the market execution order, you want to play this trade very, very close to your chest on US 30. And what I mean by that is you've got two zones that need to get mitigated. Which one is going to get mitigated first will be based on this area, on the London session today, right? So if markets break here, then they're going higher. But if this area of value holds, then you could get a play at 3 o'clock today or 9 a.m. tomorrow for a buy like that, right? But if this area does not hold, then you might then take the much more riskier option, which is to resell this leg. Why am I saying it's a risky to sell? Because you have to look at structure. Don't forget what structure is telling you. Structure is saying, well, we've been beaten down for a long time as indices. We've finally broken out of this long-term bear of the inflation saga, right? And all of a sudden, markets are now making higher highs. All of a sudden, markets are making higher highs, right? So, and then, this could be, valued as a lower low, but markets didn't go lower than. If markets break this demand, then we're back to the down tip. So I'm saying be careful of selling here because markets might not be in the greatest moods to sell with you. Because right now they are starting to slowly but surely start to form, the skeleton or a blueprint of an uptrend, slowly but surely. Right. So what you want to look at as well on the way up is what markets are leaving behind here. Because when you start to sell, when the day comes, which is within the next 24 to 48 hours, you have to calculate what's good for your account. Remember, we are not Facebook traders, Mr. Allen. We're 365. And that means we have to account for the fact that we understand what on earth is going on in the charts. If this is a 365 candle, which it is, it's not a bearish engulfing pattern, and markets by 3 o'clock today, by tomorrow, leave an imbalance in the zone, then even if you decide to sell for whatever reason, and I'm not saying you must sell where I've just drawn a yellow zone, I'm simply saying that's the zone that's going to tell you the direction of price today. If we break here, we're going up. If we break to the downside, then there's still enough sell pressure. But if we go beyond and we break the zone and start selling here, you've got a problem, or be mindful of when to take profit, right? Because if markets start to create higher lows along the way, then you don't care about this zone here. You're not going to use your money to hold up until you get there. You're going to get out here because that's the right thing to do. All right. Otherwise, you're going to be taking a ride and price might move against you. Mr. Allen, hope that's good enough, sir. I won't be in the cell with you. Right now, I'm watching US indices, like a hawk. I'm in no rush, but I understand everyone trades what they want to trade when they want to trade. I'm just giving you the best outcome is sell as high as you can, 34,800, give that 25% rest. So 34,775, 76 will be a good place to sell. Make sure your account can afford it, and be mindful when you sell where you're going to stop. All right. So I hope that's good enough. Right now, I did say every morning session now I'll be introducing one index to you. And today from our document, if you're a registered student, you have this document, you should be practicing on this document, you should be back testing on this document, you should be leroying the living daylights out of these charts every day. Every day you analyze two charts. Every day you back test something, you will become an efficient trader. Until then, you will see ups and downs in your accounts, but no real money. Right, you have to work for this money right now. So I want to show you guys this one, the OMX30, and if I'm not mistaken, this is a Swedish index, Swedish OMX30. And full confession, I haven't traded this in a long time. There we go, Sweden. All of this is taken out of my usual broker that I recommend for beginners, which is Arbitrate. So they've got all these indices and more, right? And Sweden future index, right? So markets are clearly closed. We're gonna go straight down, right? Top down, holding a buy, right? There we go. Markets found a bottom. Yikes! Markets found a bottom. I'm just gonna quickly double check to see if we can find a better chart. This chart that we have right now doesn't give us the best outlook on price, but it is what it is. We are almost stuck with it. Let's go to index here. Yeah, well, okay, that's all we get. That's fine. Right. So, we've got up until about data from about, last year, which is so terrible. But anyway, it's a Swedish index. If I was to take a trade, I wouldn't. It's going to be a quick run through. I definitely would not take a trade here. Although, markets are starting to make their way up, right, since March of this year. Interesting. Markets starting to make their way up. The long-term target for this index is all the way up there. If you want to trade it, thank you. Was in a sell from yesterday, but I've already closed. Oh, okay, cool. Well, see, yesterday's sell was a great idea on the US 30. Good on you for tracking that. So now you just want to see how price will play out. Right, so this is price right now on the daily time frame on the Sweden 30 index. You can see a lot of market price gaps, and we know that price gaps represent a significant imbalance. It's just that you have to catch the correct order blocks that created the gap, right? So this is what it looks like on the H4 time frame. I'm gonna go at Kinihashi because the Kinihashi shows you the order block. You see how that was? I highlighted the. Let me show you what I did one more time. Go to the daily time frame. I see a gap. Where's the gap? The gap is here. I don't want to trade inside the gap. That's crazy. All right. Trading inside the gap is crazy. It's like going to space without an astronaut suit. You don't know what's going to happen. But what I want to do is I want to understand the gap. This is gap up, gap down. It's a gap up. It's a buyer's gap. What do gaps do? Gaps create an imbalance. Gaps need to be filled. So where do I want to wait? I want to wait by the order block, the demand level that created the gap. They first had to load money somewhere for markets to gap. And so if I can't see it on my normal price chart, I'll go at Kinihashi. It'll show me exactly where. There we go. We're going to wait somewhere down there. So if you want to trade that on the H4 time frame, you know, I have no idea what's going on in Swedish. I have no fundamental outlook. And fundamentally, if you know me or if I've taught you long term, you know, I really don't care too much about that. You know, fundamentals are good for understanding what's going on in the world. I just follow money. I like to trade money, right? So we've got a clean imbalance. We've got markets breaking the first demand. You never take the first demand because, you know, it's a problem. It's too low, right? Price taking out supply, that's good because you really want to go up. And so all you want to do on the H4 time frame, H1 time frame is wait for this. And you're on your way. Your next price target should be somewhere there. That is actually an incredibly good trade idea. The only problem with this is, once again, not enough data. We should have done this on maybe on a live account like my AvaTrade account just to see, you know, everything. On the 1 hour time frame, you want to have a look. Woo! You see her? That's pretty. That's pretty. That's gorgeous, right? On normal candlesticks, you probably see more such a clumsy mess. You got a PCP following this trend, closing the first gap. So markets were here, gap to the downside. PCP finally fulfilled this gap, closing it. You guys see what I mean by closing it? It closed it here. You wouldn't believe this. We now went over an hour, right? And then markets gap to the upside, right? Which is perfect, right? So I'd like to first see this filled, and then I'd like to buy there. 365, everybody, shake my hand. Please check your right index finger, left index finger, and don't forget to hit the like button if your index fingers work. I would appreciate that. If you stayed this long, it means you enjoyed something out of the video. Don't forget to like, share, and subscribe. And I'll see you guys tomorrow, Friday, for a morning session. I can't do afternoons on Fridays. Right, stay blessed. Take care of yourselves. And see you on Saturday night, movie night. See you on Sunday for Traders War Room. Goodbye. Goodbye, everybody. Thank you. Thank you so much. Cheers. Cheers.